So in part one, we were discussing the difference between trend following long, trend following short, counter trending short, counter trending long. Now, it is true that it is easier to make money following the trend. The reason being is, the thought being is that the trend is going to be more sustained and there'll be less likelihood of being carried in the opposite direction. The winning percentage is low, 40 to 50% of the time. If you can win 40 to 50% of the time in a trend following system, you should do very well. In a counter trending system, you will win 70 to 80% of the time, but your trading must be precision. So if you like to be correct, you like that affirmation of I'm right 7 or 8 out of 10 times, then counter trending can be a great way to go. If you have a stubborn streak and you cannot be wrong, you can admit you're wrong, it's a very explosive combination, because the counter trend is short-lived and it will go against you. And if you don't admit that you're wrong and have a stop in place, you will be carried away by the trend and carried away till your bank account is empty. What is also the challenge is I didn't describe to you the time frame here. Or is there a time frame? Well, there is a time frame. This could be a monthly chart. I didn't say. This could be a weekly chart, a daily chart, a 5-minute chart, or it could be a price chart, an intraday price chart that is moving tick for tick. And the time that this actually covers could vary. I mean, this could be just 5 minutes. Right? So what appears very, very simple can become complicated. If you don't have an understanding of what your objectives are, what are your needs, how much time do you have, to devote to trading intraday, swing trading, or even investing for that matter. Generally, intraday, people will play and trade highly leveraged products for very short bursts of trades. Investors, on the other hand, may trade a smaller amount of money and invest it for the long term, where it's scheduled or expected to perform over a period of months. If you are motivated by greed and you don't have an understanding of the various trending styles and counter-trending styles, and you're simply motivated by the amount of money that you have supposedly made or in, then what will happen is you could get in here and get long and maybe make a couple of $1,000 on an option, and only for it to go up here and miss out on a $20,000 option. Your greed could introduce chop into the market. So between the market chopping and flopping itself and your motivations to move on the money, you could very well be introducing chop to something that is not really chopping, just pulling back and gathering steam to go up or go down even further. And then to complicate things, again, this could be a trade that you put on here for a period of, well, let's say here. Let's say you put a trade on right here. Let's say it's a put option. And the market did come down. Or maybe you put it in here and you were up $1,000 or $1,500, and then in one day, maybe it was Friday, the market rips up. and you see your option go from $1,200 to $200, and you say, oh crap, I gotta kill it. And you make your $200, then only for the market to totally crap out, and the option that you had over here, you're now out, and you had a chance to make maybe 5 or 10,000. So if you don't understand how the market moves, then you're going to be confused on how to play it. And if you don't understand, the working capital you have and what your objectives are and what your needs are and what your style, developing your own style, you're also going to have challenges. And if you don't understand the indicators that are available, and even if they're proprietary, then you could have a rough time. So this is a friendly reminder to our long-term followers, mid-term, new, and even new people. This is what we talk about all the time. So I want to pause right here and go to the market that we had on Friday. And let's go take a look. Now this is the Russell 2000 futures contract. It's in a classic Renko set at 1 point. This is midnight. This is approximately 9 o'clock in the morning, 9:50. We'll get right on it here. This is 9:45. So this is the start of the day. And can you see, is the market going up or is the market going down? I don't have anything on here other than just marking the time. Did you sell the market? Why? If you took any of these are what? Counter trends. Counter trends. And you're in an uptrend. So if you took the counter trends and you didn't know where to exit, you could have got killed or carried away. Right? Now, if you are a counter trend trader, there's always counter trends, but you got to be very, very careful where and when, and very judicious when they're used. Whereas if you said, hey, I'm headed up, and got long in here, up, pull back, 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 up, you had a big, big day. So if you have indicators that are on your screen that either you're not using or you're not looking at, you might want to just take them off, including if there's any of ours, because you might not understand how they work. If you can see it with the naked eye, that's why we draw it out on a white page initially. But let me change this, because I'm going to just change this to a custom Renko. It's going to look very much the same. It's nothing going to change here drastically. Still make it 1 point, 1.25. We're going to make it 2 months back. We're going to let this populate. And this is a custom Renko, and this is at about midnight, and this was about 9:30. This 10 o'clock. How does that look like to you? Up, right? Are there some counter trends in here? Yeah. But bagger, it's not fair because it could have gone down. Yeah, it could have, but it didn't. And there are characteristics. There are characteristics that the markets will give you when they start to go down. Yeah? Okay. So let me show you some things that we do for our members. First thing is we're going to put on here some pivot information. And this is where prices are being accepted and rejected. When you see this is a rejection of a price, this is the acceptance of a price. Rejection, accepted. When you are headed up, you want to be a buyer on the green dots. If you're headed up and you sell on a red dot, you better have a stop there to admit that you are wrong and break even or lose very, very little. They represent the counter trends, but the overall trend is what's important. So you could have bought here and 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 even here and even here. And you can see how easy it is, because if you miss, a profit target, the trend is probably going to carry you away, right? But if you got short here or here or here or here or here, and you didn't know the rules to get out, then you could have got killed. Okay, I'll take that. But what else, Bagger? Is there got anything else? I mean, how do I know? Well, let's look at this. We have something that we call the GPS distant indicator. Well, let's do first the GPS near indicator. Okay. And the near indicator is showing you that when it's green, it's going with the trend. That's all you have to know. So this is a buy, and that's 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 a buy. Do you see any red here? No. They're yellow, Bagger. Yeah, because even though they spot the counters, this is a counter, this is a counter, this is a counter, this is a counter. They're all counters. And you got to be extremely disciplined. How does it know it's a counter? It's programmed to know. How about this? What if we take a little distant view? In the next video, we're going to talk about this, and we're going to talk about the resolution of a trade. Yes, the resolution. This is the distant view. Look it was long way back here. The uptrend started way back here, actually on May 2nd. It was all green. I mean, yeah, there was some little pullbacks, but the distant trend was telling you on Friday it was all up. So if you don't know, are you a trend follower? Were you counter trading? If you don't know, well, that's a problem. That could be a problem. That's the end of video number 2. On video 3, and we'll probably wrap it up with that, we're going to show you, we're going to give you some more details. And we're going to show you some of the other proprietary. This is a proprietary tool of ours. These pivot information is. And everyone says, oh, that's just pivot information. No, because this tells us if we got higher lows, and this tells us if we got lower highs. Okay, that's all the difference in the world. And in the next video, we're going to talk about resolution, trade resolution. We'll be right back for part 3 if you stay with us.